Okay, guys, hope everyone is doing well. Thank you for being here. Before I start, I want to give a couple minutes for everyone to join, do a mic check, let me know if you guys can hear me in Discord. That works, or the YouTube chat is fine as well. Okay, what's up, Charles? Charles says the audio is perfect. Awesome. Gonna give another minute or so. Looks like there's a bit of a delay on the stream, so I'll get your message a minute after you send it, or you'll hear it what I'm saying a minute after I say it, rather. So. At any time during this webinar, if you guys have questions, if you guys have charts that you want me to go over, maybe it's something that you've traded, that you had a hard time with, or that you actually nailed and you did great on, and you kind of want to talk about that or apply the same methodology to that, you want me to discuss that, that's fine. If you guys have any, um, specific questions in general about something that's not related to the webinar, you guys can ask that as well. Okay. Okay, guys, I'm gonna get started. Thank you, everyone who's here. Let me check the Discord. Okay, got some comments here. Lewis, Misha, Hyperfan, Miko. Can I turn off the notification sound? Notification sound is way louder than the mic. Sure, let me see if I can do that. Okay. Okay, guys, if you have any questions along the way, please let me know. You can let me know in Discord or on YouTube in the chat, whatever works for you guys. So today, I wanted to continue this talk about the liquidity traps, and it's something that my trading is centered around very heavily. And I know that we have discussed this on a few Micah shows, we've discussed this on my YouTube channel and things of that nature, but this is something that I keep getting asked about because people just have a hard time understanding, and I feel as though this topic is one of the most important topics for any trader to understand. And the reason I say that is because when you understand how the liquidity traps work, you can position yourself in a way that keeps you safe from being on the wrong side of trades. And no matter what style you trade, right? No matter if it's just regular support and resistance, it's very basic. No matter if you're, reading tape for, primary entry system, if you're using the cloud, like Ichimoku, if you're using volume profile, Fibonacci, it doesn't matter what you use. As long as you understand where there are areas that are going to be highly important on the chart, then however you choose to enter and exit is really something that is user preference. But I want to talk about these areas and why they're so important. So I have a bunch of charts here. I'm going to be going over a lot of different setups and talking about the liquidity traps and pain points and really the psychology behind what is happening here. So this webinar will really be focused on understanding why these moves happen, these chart moves happen. Okay. You have to understand that a lot of the things that we see, especially pertaining to the small cap market, is really just about traps, and the reason for that is because of liquidity and trapping shorts, trapping longs because they're diluting it. In general, it's about the trap, and that goes hand in hand with the liquidity trap. Okay, so one thing that you can always count on in markets is that there must be liquidity to do business. That's across the board. Okay, you can't get around it. No matter what your bias is, no matter what your agenda is, there must be liquidity for you to successfully complete that business ordeal, right? That business transaction. Second thing that I want to say is the key word in that is transaction. There must be a transaction process. So when you understand these two things, this webinar will make a lot of sense to you, and it's something that so many people struggle with. Okay, it's very important to talk about this and understand what is actually happening and why, so that you can be on the right side of trades. So when it comes to the liquidity trap, it's all about the agenda, and it's about who's in a lot of trouble at this very moment. And I talk about pain points a lot. For those of you who have seen some of the videos on my YouTube, I'm going to be going over more examples of that because since I started talking about that on YouTube, a lot of people have told me, hey, can you do a webinar on this? And I didn't right away because I'm like, well, we talked about a lot of examples on YouTube. But more and more people, I think I've had over 10 people in the room ask me to do a webinar on the liquidity trap. My approach to the liquidity trap. So that's why we're here, and that's why we're doing it. This is really important because the one thing that traders often struggle with is buying breakouts, fake breakouts, and the breakouts are stuffed, and also shorting on fake breakdowns, and then the stock spikes. When the stock spikes, it hits new high of day, which is where they stop out, and the stock tanks. If this sounds familiar in your trading, and I know it does for many years in the beginning of my own trading, understanding why this happens is so important. And that's like, set aside all of your indicators and your strategy and whatever, because that will come second to this. This is the most important thing that I can talk about to traders who have not found consistency yet. Okay, so first thing I want to talk about is the 5 main areas of where they often like to raise liquidity. Okay, these are very emotional areas on the chart. Number 1 is new high of day. So I'm going to go in Discord and I'm going to write these down as I talk. Okay. Number 1 is new high of day. Okay, the new high of day is very important for long traders, and it's also very important for short traders because it's often an area where shorts stop out. They very often reference the high of day as risk. Okay. Number 2 is new low of day. Now this is very important because if you're long, the last thing you want to see is the new low of day, and if you're short, you would love to see the new low of day. Okay, and for shorts, this could be an opportunity to add to an existing short position or enter a short position. And we'll go over charts and talk about all of this and what is actually happening. The third one is pre-market high, which, as you guys know, is very important. Max often references the pre-market high, and for good reason. Okay, it's something that everyone is looking at when the market opens. They're identifying the pre-market high and seeing how the stock is reacting to it. Okay, because breaking the pre-market high can be a very bullish signal, but that is exactly why it becomes so dangerous, and I will discuss that. The fourth one is the pre-market low. The pre-market low is important because if you have a stock that's gapped up really high and the low of pre-market is breached, it can signal a bearish reversal. It can signal to a lot of people that the stock is very bearish, and that's also why it makes it very dangerous. And we'll talk about that. And then number five. Number five is dedicated to what I consider to be the most popular indicator for retail traders. That indicator is the VWAP. If you look at 10 different day traders charts, I'd say 8 of them have a VWAP on their chart. Okay, it's like the starting foundation for day traders. Everyone has just a VWAP on their chart standard almost these days. It's very rare to see intraday trading. It's very rare to see intraday when someone does not have a VWAP on their chart. And why is that important? That's very important because you know that there's so many people that are utilizing and looking at the VWAP. So when you have a ton of retail all looking at the same thing, it's very important to understand how the VWAP is used in its traditional sense and why that can become either a big problem for you or a great edge. And I've talked about this a lot in the past, as you guys know. I'm always laughing at the the VWAP stuff, and for me, it's a no-brainer. I don't use the VWAP in its traditional sense. I use it against most people who are using it in their traditional sense. And I'm going to show you charts, and I'm going to show you why and how it's been working for me for years, and why I believe in that. So first thing I'd like to do is start off with the Codex chart. And when I go through a chart, we're going to be talking about the pain points on the chart. We're going to be talking about how, if I was short in this chart, I would short it, and if I was long, how I would long it, and then also my thought process behind that. Okay, so first thing I want to do, we take Codex here, and I think that it's a great start just to notate the pre-market high. Okay, now this is very important because almost all intraday retail and even if you're not retail, everyone is referencing the pre-market high. Okay, so the stock gaps up and it has a pre-market high of 296. Okay, the stock then has a swing low level of 261. Okay, I do this on all my charts every single day pre-market. I'm always doing this on my charts, and I'll explain to you guys why I do it, and you guys will see for yourself my whole process, and hopefully it benefits you. But really, this is so important to me, and that's why I'm going to be sharing it with you guys. So we've referenced the pre-market high, we've referenced the swing low, and now the market opens. I am not looking, for those of you who are wondering, at this pre-market low because it's just way too far away. The pre-market high is 3, the pre-market low is 189, and when you have a stock like this that's $2, to see that dollar range in between these levels, I very rarely see that go into play intraday. Does that make sense? So pre-market high is very important, and I'm using the swing low instead of the pre-market low because it is much lower. This is only 30 cents or whatever it is. It's not a dollar. Okay, so you have to understand that when you have a $2 stock like this, or whatever, $3 stock at the pre-market high, to see it have a pre-market low of $2, it's going to be rare that you see that $2 area come into play because there's over a dollar range on it. Okay, so for those of you who are wondering, that's why I didn't use that area in this chart example. So just a little tip for you there. So pre-market high, the swing low, we have our VWAP here. Okay, right out the gate, the market opens and the stock tanks. Okay, now it originally put in this opening high I'm not going to put this as a line, but I am going to mark it just for reference. So it had an opening high here of 280. It bounced off of that swing low. It tried to reclaim the VWAP, and then it flushed, right? So right away, what do I see? I see weakness right away. Okay, so this is the opening high. This is the lower high. It breached the swing low and it could not hold the VWAP and it dumped, right? Now, for inexperienced traders and very aggressive short sellers, they are shorting this immediately. And another area that I think is important to notate is the whole and half dollar area, which is this 250 area. Okay, so I'm going to notate that as well. So it's below the pre-market high. It couldn't hold the swing low. It couldn't break the opening high. It put in a lower high. Couldn't hold the VWAP. And it got below 250. Literally, at this point in time, everyone thinks it's dead. Okay? So these are my pain points. At this time of the market, in the morning, when I see this, I'm starting to reference different areas on the chart and talking about pain points, okay? So this opening high is one. This lower high is another. This swing high, or sorry, swing low is another. And this 250 whole and half dollar area, which is just how I reference them, is very important as well. So what do we know from this information here? We know that there was multiple areas for short sellers to get into the stock, and there's multiple areas for longs to get into the stock too. But first of all, let's start off with the short side. As a short seller, what do I see here? I see the opening high, just the open, because price never breached that area as far as this chart goes right now. Later it does, but we'll talk about that. So we have the open, which is labeled number 1. Then we have number 2, number 3, and number 4. Really aggressive short sellers could have just gotten in at market open. Okay, so just remember that. When the stock bounced off of the swing low, which is my white line, and it breached the VWAP and stuffed, traders could have shorted at number 2, risking number 1 and hoping that the stock tanks at the VWAP, okay? Number 3 is when the stock got above the VWAP but faded and rejected the VWAP and came back down and breached the 261 swing low, that is an area for shorts again to chase the stock and short it there. And then you have level number 4. And level number 4 is the whole and half dollar mark, which for traders who are already short at 1, 2, or 3, number 4 could be a place for them to add. Okay, if they're not short at 1, 2, or 3, then level 4 could be that line in the sand that they're saying, I'm going to short here. So what do you see on this chart? If you are just your average retail trader and you're just looking to gauge strength and weakness, it looks very, very weak. Okay, for multiple reasons. It looks very weak. We were below the pre-market high. We took out the VWAP. We took out the swing low. We took out the whole and half dollar mark. This is dead, right? Now, if you stop time right now, you have to ask yourself, who is trapped in this stock right now? Is it longs? No. It's shorts. Because if you're a short seller, you have had every opportunity to short this stock now. You haven't just had 1 or 2 chances. You've had a lot of time and a lot of references to short this stock. And you better believe that this stock is loaded with shorts. Okay, so I did a short squeeze webinar and I talked a little bit about this. And if you haven't checked that out, make sure to check that out. But I'm going to be talking about both sides now, not just the short squeeze, but I'm going to be talking about both sides and why they're important. Okay, So that's the short side of it. Now let's think about the long side. This stock gapped up. Now, unfortunately, you're going to have a lot of people that are just going to buy it at the open. Okay, I know what you're thinking. You're like, that's ridiculous. But new traders and traders who maybe have had success in the last week buying gap ups at the open and they spike huge, whatever. There's a million different reasons why people do it, but people do it. So you have area number one where longs could be buying it there. Okay. Maybe they're risking the swing low. Now you have the swing low. Longs could have been buying there. Or you have when the stock bounced at the swing low and it broke the VWAP, longs could have bought there. Or you have this whole and half dollar mark 250 where the existing longs could have been using 250 as a risk to stop out, which by this chart looks like the most likely situation for longs. So this is really important, right? Because longs are very hurt. They've probably had stop outs, and that's why you see the big red candle here at 935. Okay, so longs were long in here. They longed because they thought that this swing low was going to hold as support like it did here in pre-market. When it breached the VWAP, they probably loaded it up and bought the stock, and then the stock tanked. Those longs were stopped out. Okay, so longs right now for this chart are wrecked. Okay, they're done. Most of them. I want to say most of them. It's never all of them, but most of them. There's probably very few longs remaining in this stock, okay, because it took out multiple areas of support. Now, remember, it's shorts who are stuck here, okay? So when I talk about traps, and we're going to talk about both the liquidity trap and we're going to be talking about regular traps, okay, because they're not both the same. When the stock reaches number 4, okay, so I'm just going to make it really easy for you. I don't number them on my charts, but I do reference them on my charts. But for the sake of this webinar, I'm going to just be numbering everything so that you can follow me as I go. Right now, after we put in price below number 4 is when all shorts are stuck underwater. Okay, so this is something that I'm looking at. So stop time right here. This is something I'm looking at for every single chart at the open. If I see the stock put in a high, reject that high, take out support, multiple support levels, and reach a new low of day, and the stock starts to go sideways, like it does right here. Let me show you with some arrows. Okay, you guys can see that price is completely sideways. If the stock takes out key support areas and it puts in lower highs and the stock is not tanking, I am on very high alert for a squeeze. Okay, so this is something that I want you guys to take notes on. If the stock puts in a lower high or a series of lower highs and takes out support and does not tank, you have to ask yourself why. Why, after the stock has been showing us such weak price action, such relative weakness, is it not collapsing? Because remember, this is a gap up. Okay, it has room to fall, right? So this is what I'm looking for every day at the open. If you guys have seen me catch a lot of squeezes, and you guys will often see me say in the room, beware shorts, you know, the Widowmaker pattern. I mean, I have a few different things that I talk about and reference. This is one of the big things that I'm looking for, okay? So right now the stock looks very weak, right? And all the shorts are in it. Now what happens when the stock starts to go sideways and grind is that shorts will be very uncomfortable the higher the stock goes and the longer it takes that you're going sideways. Okay, so if you just imagine shorts being in here at 1, 2, 3, and 4. Right now, 4 is in the most pain, right? For the people who entered at 4, or for the existing shorts who added at 4, they're probably in the most pain. So where is their reference points? Okay, number 3 is a great reference point to start, okay, because this was previous support. As you guys know, previous support, when price action gets below it, can be tested as resistance. So people are referencing number 3. Now, what's also at number 3 is the VWAP. Okay, so they're absolutely looking at number 3 because of this previous support, which has now become resistance, and because of the VWAP, as a reference point for their short position. Okay, so they may be exiting if price can get above VWAP, or they may be adding at number 3, which is also very important. So you have to remember that. Okay, when the stock rejects number 3 and the VWAP and it starts to come down here and it takes out this $1.5 mark again, they probably think that that was it. It's going to roll over and it's going to tank. So if they stopped out here, they may have gotten back in here, right? This is still level number 4. Or if they added here, then their average is lower. And this level right here is very important for them because they want to see a big flush at level number 4. Okay, so I'm always looking at what the possibilities could be. Now, of course, this is not 100%. I don't have access to the book, so I can't see who's actually short when and where and how much volume is actually short at different areas, right? But I can only assume because I'm looking at the same chart as everyone else's. So this is very important. So let's move forward here. The stock has been going sideways for a very long time, okay? So the stock has been going sideways for 37 minutes. Okay, imagine being short and you've had different times to add and the stock is just going sideways, okay? What happens here, as you guys all know, is that a lot of people are getting worried and they're getting impatient. And the slightest spike after the stock has gone sideways for that long will freak people out and they'll say that, okay, this is not dying. This is going to run, which is why it's not tanking, and I need to GTFO. Now, remember the reference points, okay? So for 4, they're looking at 3, 2, and 1. For 3, they're looking at 2 and 1. For 2, they're looking at 1. And for 1, they may be looking at pre-market high. Okay? So remember all of these reference points because they're very important. So what happens here? The stock starts to spike. Okay? Now, what happens when you start to breach these levels after being sideways for so long is there's going to be a ton of panic. And that's really where the short squeeze trap comes into play. And this is a trap webinar, so I'm going to be talking about the traps. You guys can see that this was a huge trap. Okay, how do you know that it's a trap? Well, the stock was made to look very weak. Okay, put in a lower high, took out multiple support areas, and then it started to grind. Okay, so like I said, remember this. When the stock acts very weak like this and takes out multiple areas of support and it does not tank, that is a very big red flag for me. I want to see the stock really bleed out and fade and collapse. And if I don't see it, that is a huge red flag for me. Okay, so in this chart, you actually had a lot of time. Okay, unfortunately, a lot of people were squeezed here because you can see how dramatic the move was, but you actually had 37 minutes to really gauge and digest this move and why it's happening and what the worst case scenario could be. So there was a lot of time, and unfortunately, people were stuck and trapped in this. But just remember that. I just got a message from Matt in the room, just joined webinar. Do you track sideways time for setup before squeezing, say relating to the time of day? Um, I don't track it like on Excel, but I do notice if it takes more than 5 minutes after that flush of major support, which is what I usually call line in the sand. Now, that's going to be different with every chart. We'll talk about that. This chart did not have a key line in the sand. Okay, so I can't just say that there's one line in the sand. What I can say is that number 3 and number 4 are very important reference areas, but there's not one here. So when we get to number 4, which is that whole and half dollar mark, when I see the stock for 3 to 5 minutes not breaking below, and then again I see it here, I would have been out for sure. Even here on this candle, after going sideways for this long and starting to spike, I would have already been out. But if I was still in and I saw number 4 again breach, but the stock is not tanking and it's just hanging around here and then it starts to grind, that's a very big red flag after 3 to 5 minutes, I'd say. Maybe even less than that, honestly, Matt, because usually when you see the line in the sand breached, the stock completely collapses. So when you don't see that on a gap up, it's a big red flag. So just keep that in mind. That does not mean that it's going to squeeze, but that means that there's something wrong here. And you have to remember your exit plans, okay? And having the same exit plan as everyone else can be very dangerous because you could just get stuck in the squeeze. So the stock comes back down to 4, can't break it, okay? This is when shorts are really starting to panic. Okay, this is when shorts are like, I need to think about my exit plan in GTFO. Okay, so one really great thing to keep in mind is all of these reference points. So the stock starts to grind a little bit, it breaches 3. Okay, this right here is the most important area for me for this squeeze. Why? Because 3 is the point in which everyone is looking at, and it's also the VWAP. 3 is the point that rejected before, right? So we had previous support, right? We held previous support and bounced, then we got below it, and then we retested it as resistance. It's coming back down here, and it looks weak all over again. All is good. All is good on this trade. But people are thinking if it gets back to 3 or above 3, that's really bad because this is the main area. So for the short side, I don't have a line in the sand. For the squeeze, I do have a line in the sand because I think that 3 is the most important area on this chart, and that's for 2 reasons: the previous support and the VWAP. So you have to understand, if you're using this area as risk, you're going to be stuck in a big spike should the stock spike. You will get very hurt on it, and having a stop loss, a hard stop, may not even fill you with with how fast this move can happen, or you may get a partial. And that's something that I talk about a lot. People are like, oh, you better use hard stops. Well, you know, if you have size on a very low float stock and the stock just spiked $1 in whatever 10 seconds, you're not going to be filled. You're not stopping out. Okay, this is a common misconception. You have 20,000 shares or anything like that, you're not going to get out where you want to get out. So this is also very beneficial to people who, yeah, exactly, Matt. Slippage would be a mofo. It's just going to skip over you. I mean, hopefully you'll get a partial, but you're not going to get 20,000 shares off at whatever, 264. Well, actually, that may be possible, but you're not going to get 20K shares off at 272 when the stock is spiking like that with this amount of volume on a low float stock. It's very, very unlikely. Okay, so that's also important to understand where you keep your risk, right? So If the trade isn't working, it might make more sense for you to stop out here, right? Before the mass panic. Okay, does that make sense? You know that if everyone is looking at this area to stop out at, you may want to mitigate some potential losses and take some off here or all of it here. That depends on you. Okay, but that is what I do in my own trading. I do not want to stop out at these areas where I know that everyone is going to be stopping out at. And in fact, I wouldn't even be short on this in the first place. So that just has nothing to do with my own approach to Codex. If I was looking at this chart, I would not be short. Okay? But I'm just talking about for other people. If you were short, understanding, and that's why this talk is so important, right? Because some people are like, this is basic stuff. This is not groundbreaking stuff, but this is so important to understand. If you have mastered understanding what the herd is looking at, it's a big, big edge. It's a huge edge. You do not want to be trading the same way that the herd is trading. You do not want to be. There's no edge in that at all. Okay? So this is the most important thing that I can talk about for trade, because this is the foundation of any trading system, is understanding who's hurt. The most success that you're going to have as a trader is trading on the opposite side of the majority of retail, period. And when I started to do these YouTube videos, they got so many positive reviews and comments, and people absolutely eat this stuff up because it makes perfect sense to people. And this is why we're doing the webinar, to just go over so many examples. So please, if you guys have a chart that you want me to annotate, or you have any questions, please ask me in Discord and we'll go through it. Okay. So we talked about the short side, what happened on the short side, and the whole psychology behind short retail, and obviously the squeeze and what went wrong. Okay, taking out multiple areas here, not seeing the stock fade, going sideways, and then when you start to clear these areas, these are areas that people are using as risk. Remember, that's why the stock is spiking, because everyone is tripping over themselves to get out to GTFO. That's what happens on a low float stock when the stock starts to spike. Okay, so after all the shorts have been trapped and likely stopped out, and you can see that. Now look at how crazy this is. If shorts are short at 4, they're using 3, 2, and 1, like I said. 3 is using 2, 1, and pre-high. 2 is using 1 and pre-high, and 1 is using pre-high. So look at all the cycles of shorts that were squeezed and likely stopped out at pre-market high. Okay, now we're going to talk about the long side. Okay, longs are looking at this 250 area that held as support. Longs are looking, and we're going to do the same exact thing. Okay, now I'm going to reference the long side of this trade. Longs are looking at this 250 area that held as support. Longs are also looking at number 3 over here to the short side, which is now going to be number 2 for the long side. And that's also VWAP. Okay? Then number 2 is going to be number 3 for the long side. And I do this on every chart. And this truly helps you understand what is happening in the psychology behind retail at this very moment. Okay? Number 1 for the short side is going to be number 4 for the long side. Okay, and then you have the pre-market high, right? So long see that 250 is holding, long see that this area here, 261 in the VWAP, was rejected before. So the same reason why shorts are panicking if price can reclaim 261 is exactly why longs are interested in it, because they know that if price reclaims 261, this thing can really run and it can squeeze. So understanding this on both sides is so important. So then longs are also looking at the other areas of reference that shorts were looking at, right? It's the same thing. We're all looking at the same chart. We're looking at 3, which was the lower high in the morning. We're looking at 4, which was the opening high. And then we're looking at the pre-market high. Both parties are looking at the pre-market high, but for different reasons. So now let's walk through the long mindset. Longs are seeing 250 hold as support, okay? Now, they are probably very happy about this, and they may even be buying here. Now, we have to assume any possible scenario. We have to just take that into consideration. But I suspect that the majority of longs would be buying at 2, okay? The majority of longs would be buying at 2, using 1 as a risk. This is the same thing in reverse, okay? Others may be buying at 3 or adding at 3. Others may be buying at 4 or adding at 4, using 3, 2, and 1 as risks. Now, if these are your entries, these areas below it could be possible risk, right? Then you have the pre-market high break on this squeeze, and you can only assume that the people who were here maybe have gotten out, sold for a little bit of a profit, maybe have gotten in here as a starter, and they're going to add huge at the pre-market high break, okay? Now, this is what I mean when I talk about fake breakouts and fake breakdowns. So if you're looking, and this is where the liquidity trap comes in. Codex, let's talk about Codex as a stock and their company agenda. If they are looking to dilute and dump shares, what is the absolute best time and place to dump shares of the stock? Now remember, there must be a transaction. We talked about that in the beginning of this webinar. So there must be liquidity, which is why this is called the liquidity trap. There must be liquidity to dump, right? Who knows how many shares they have to dump? They have 1 million shares to dump, they have 500,000, whatever it may be, right? You need to have volume to be able to do that. You cannot do that if there are no areas of high volume. Okay, you're just not going to be able to get that stock off. Who's going to be buying that stock, right? So if you're looking to dilute and dump shares, the best time and place for that to happen is when longs are at their peak. That is the best time and place. When longs are buying the stock, when all the longs are buying the stock and looking for the stock to be running huge, okay? Now, that is why you guys will see huge amounts of fake breakouts. Look at the volume here on this move, okay? Now, this is not just shorts panicking out. This is longs buying all inside of 2, 3, 4, and especially pre-market high. Okay, so shorts are stopping out here And they're also using $3 here, which I didn't even notice before, which is important. They're using $3 here as a reference point too. Okay. So you see the huge volume at the pre-market high. And when you see the pre-market high break, remember, it's one of the 5 most important emotional areas for traders. When the pre-market high is broken, it can signal a huge bullish reversal. So everyone thinks, especially the longs that were hurt early in the morning, everyone thinks that this is going to run. I'm going to add or I'm going to buy huge at the pre-market break. This thing is going to $5. At that very moment, that becomes the best time and place for them to dilute and dump shares into long retail. Okay? And this is why we see the fake breakouts so often. So this is why this trading methodology, this approach is so important. No matter what indicators you're using, no matter what approach you're using, understanding the liquidity traps will save you so many hard lessons in the future if you just understand the 5 key points of where they are most likely to have a liquidity event and that could be different things. They could bait shorts into making the stock look very weak. That's baiting liquidity for the move higher. Okay, so maybe they are looking to dump, for example, you see it in the filings a lot. Maybe they have warrants or they have an agenda above a certain price, and I don't know Codex, so I can't talk about Codex in this example, but they have whatever it may be at 284, right? So they're looking to bait shorts down here and get a ton of short volume, get everyone shorting the stock, because when the stock squeezes, the reference points will ensure that the stock squeezes above this 284. The 284 is hypothetical, but think, if they need to be above 284, and that's where they want to dump, they ensure that the chart looks like it is very weak under 284 and maybe around 284. They could be using that as a reference for longs to buy the stock, right? So when the stock starts to squeeze and it gets to that area with the volume, it's pretty genius, but with the volume that they need to dump to dilute shares, that can be what they need to dump those shares into long retail. Okay, so this is very, very important. This is why you often see Max talking about the pre-market high reject short. I mean, he talks about it almost every single day. So that's why I think that this webinar is highly important, and studying these pain points and reference areas is something that I encourage all of you guys to do. Okay, so in this example, we talked about the pre-market high break. Now, we have 5. We have 5 main areas that are very important. Okay, so we saw the pre-market low, we saw the VWAP, we saw the pre-market high, but in this case, the pre-market high was most important here. Okay, now after the stock comes back down, it breaches the VWAP. This is made to look very weak again, and you can only assume that after short sellers see that the stock has topped out here and failed at the pre-market high and gotten below the VWAP, that the stock is dead. This is why I talk about the VWAP all the time, and why I can't stand using the VWAP in its traditional sense of over as a buy indicator and under as a sell indicator. It's just, for me, it's ridiculous. Okay, and I'm going to show you lots of charts and show you why I believe this. But at this point, you can only assume that a ton of shorts are now back in the stock short, right? They may be using the pre-market high as a risk now. So after they're short and the stock grinds to pre-market high, they may have stopped out, right? Now again, it's the same thing all over again. Price breaches this pre-market high after, remember, think about it from a long perspective. This successfully bounced at 261 and the VWAP, so now it's really going to run. So what happens here is people may be buying it in anticipation or already have an order sitting here to buy it at the pre-market break again, and then it collapses again. It's the same exact thing over and over and over. So it doesn't matter what style of trade methodology that you're using, what style of entries and trading that you have. Being able to reference these areas is very important because I don't want to be long up here and I don't want to be short down here. Now, there are times when I do want to be long, and I will explain why those charts are different. So right here on Codex is where tape reading comes into play very heavily. Okay, so when you see Codex break the pre-market high, you will see the tape stall out immediately, and you may even see some big hidden selling. Okay, but you'll see, even if there weren't hidden sellers that you could identify, you could see that something is very wrong. So for me to be able to buy this breakout, I would never buy a breakout that has breached this quote-unquote breakout point, right? Now, this is the pre-market high. So everyone is thinking, well, if it breaches the pre-market high, then this is a great area to buy the stock. And that's exactly why it makes it dangerous, which is why I've said that at the start of the webinar. That's exactly why it makes it dangerous, because this is an area that when everyone thinks it's a great long, that they can dump into that long retail. So for me to buy this, I not only want to see certain areas being taken out as resistance, I want this area to be taken out, and then I want this area to be successfully retested, okay? Or even if it comes back down to 4 and then comes here, then I'm waiting. But if we reclaim again and then we test and hold it, and when you see the bid support on the level 2 at this area, then the stock can really run and break out. But this is the pattern that I want to see. It will either be breach of resistance, retest of resistance, and then bid support and blast off, or it will be something like breach of resistance, may even come back down to this and do a stair-stepping pattern. Then it'll get here, then it might go to 3, then it'll get here, might go to 4, and you don't usually see, I usually see 2, 1 to 2, okay, not 3. But then it may breach again, test again, and those are the really difficult ones. So when you see it, like we often reference the pain in the ass stocks, these are the pain in the ass stocks. When you see this pattern here, this is really difficult because you're like, it's bullish, it's bearish, bullish, bearish, and you just keep going back and forth. And that's why I don't want to be trading around this pre-market high, and I don't want to be trading around the lows, because you're going to have moves that are going to look like this, and you're going to find yourself stopping out, and maybe before the move you've already stopped out too many, you've lost too many times, and then it just rolls over and you're like, WTF, I was short that stock and it just kept on spiking and stopping me out. So if you guys are having trouble being short a stock, getting multiple stop outs, and then the stock rolls over and you're like, Damn, that's exactly what happened to me on Tesla. I didn't position myself properly. I took too many stops because I was shorting weakness. Okay? Now, if you guys want to short weakness, of course, it can work, but I think that tape reading goes a lot into that when you can see that the stock is very weak around weakness, around areas on the chart, price areas that are perceived to be weakness. So I don't just want to see price action, I want to see the tape confirming that the stock is very weak there. Okay, you may even see some hidden selling earlier in the day when the stock is higher, and all the bid support is pulled at that area. So that could be a good time to attack weakness. Okay, but for the most part, for me to avoid the fake breakouts and the fake breakdowns, I want to see stocks that breach that. It's different for all charts. Okay, it could be high of day, it could be pre-market high, could be swing high, could be low of day, pre-market low, swing low. But I want to see a successful retest and bid support. That's what's most important. So one of Max's setups is when the stock gets to or above pre-market high, and then he sees the hidden seller. That is one of his bread and butter setups at the open. And that's what he calls the pre-market high reject. Okay? So this is super important. So the people who were longing this got trapped and, the longs were toast. Okay, if they were longing up here. Okay? So I'm going to go through another chart. I'm going to go through SES. I thought this one was pretty cool because this is the exact same thing. The arrows that you see on my chart are just, I can remove them if you guys want. These are abnormal volume arrows, so this will tell me when there's a ton of volume coming into the stock, and this can often signal a big run. So this is something that I always have on my charts, and I use the abnormal volume underneath the VWAP a lot. That can kind of tell me sometimes that there may be a big spike ahead because shorts are trapped. And I talk about that in my short squeeze webinar, but yeah, these are great. I love them. They're very beneficial. So SES, let's go through this again. This time we'll keep it shorter than we did on Codex because I feel like Codex was a great chart to start with the basics. So we often reference the pre-market high, which is very important. You have a swing low here. Okay, so I'm going to make this swing low white again. You have the VWAP. Okay, this swing low is also $9 area, so that's important. Take note of that. This is a whole and half dollar mark. Okay, the pre-market high is 11. Take note of that. That's also a very important level. Okay, so what happens here is the stock opens and it immediately starts spiking, right? This is Max's bread and butter. This is the pre-market high reject. So the stock breaches pre-market high, longs chase it, okay, and buy it at the pre-market high, and then the stock is stuffed, okay? It's dumped into. Now, this is so important because what do you see here? I do not see my breakout pattern on this stock at all. And this is why I feel like this webinar is going to help so many people in the future. They're just going to watch this and they're going to be like, holy shit, this has been something that I struggle with very badly, right? I do not see my break and retest pattern for the breakout or the breakdown. So I want to see price breach resistance, come back either at a higher low or at resistance and then blast off. Okay? I didn't see this. I just see the stock breach and everyone gets emotional on the long side because they're inexperienced Just like we all once were. I remember buying stupid shit like this. I remember buying fake breakouts like this only, oh, I don't know, 200 times or more. Or more. What am I saying? 200 times? Probably more. And the stock is stuffed. Okay. Now remember, I didn't see my retest. I didn't see the bid support here. If you are familiar with tape, you probably saw hidden sellers up here. Okay. But at the very least, even if you didn't, the bid support was absolutely dropped. The stock was stuffed. Okay. Now, let's remember this area here. And it's the same concept. And this is why I feel like so many people are getting hurt. And just a simple webinar like this can just help so many people. Understanding the liquidity trap, right? So SES, for example, what if they were looking to dump a ton of shares? And they very well could have here. The best time and place for them to dump is when longs are buying, when all the longs think that it's a breakout. Okay? And that is one of those areas is the pre-market high. Now just remember that. Just remember that and watch this webinar again and study all the charts, because when you understand that there's a limitation to them completing their agenda, the limitation is liquidity. It's volume. Okay? That's the limitation that they have. So to me, I want to understand at what point of the chart is that limitation lifted, because that's the most dangerous point for me to be long. Right? At what point is that limitation lifted? I need to figure that out, because I do not want to be long at that area where I know that they can dump huge. And that's why the liquidity traps are so important. Okay, so stock breaches and stuffs. It gets back to our swing low and it bounces. Okay, now all the shorts are very fat and happy. Okay, now this is a big range. This is not like Codex. So I feel as though there's not going to be as many trapped shorts as Codex, because this has a $2 range already. Okay, now that's a lot. That's a lot. And I love these types of charts, and this is why. I love the big range charts, because you have many different levels that you can reference, and you're not stuck inside of this 20-cent band. Okay, like on $1 stocks, which is why I don't trade them. So after this big rejection, and it tanks underneath the VWAP as well, and it comes back down here and breaches the pre-market swing low, what do you think has happened here? Everyone has gotten short at some point into this move. So it's either they've shorted above pre-market high or at pre-market high, they've shorted on the fade below the VWAP, or they're shorting or adding at this area here. Okay, and I'm just going to number these as well. So this is a very important reference point. We'll just name this number 1. We'll name the VWAP number 2, and we'll name this number 3. Okay, so what happens here? Remember, what did we talk about on Codex? The stock has gone sideways for a very long time. That's a huge red flag. Huge. Okay? So, if the stock has rejected pre-market highs and it's tanked below the VWAP, and it's even taken out this pre-market support area and it's not dying, even look at this. It came up and it breached the VWAP again and quickly stuffed. Everyone would think at this very moment the stock is absolutely toast. Rejected pre-market high, rejected the VWAP, broke support, and then tried again and failed at the VWAP and stuffed again back to 3. They're thinking this is completely dead. This is going to collapse. And what happens? Stock is going sideways. There's a ton of time for people to realize that there's something not right here. This is 38 minutes. 39 minutes. Codex was 37. Okay? That's a lot of time. It's a lot of time for you to say something is wrong here. Okay? That doesn't mean that the stock is going to squeeze, like I said, but it's one of the things on my checklist that's like, okay, if we just took out the line in the sand, and when I say that, SES does have a line in the sand to me, and that's number 3. This is the line in the sand for SES. Okay? So it's $9 whole dollar area, and it's the very clear support level from pre-market. And then we further confirmed that here when it bounced twice and then it bounced a third time, got above the VWAP. And so this is definitely my line in the sand. And this is very clear to see. I mean, obviously, you can see it a mile away. But what happens here is after shorts are trapped and they've gotten all this short liquidity. Now remember, this is liquidity trap. They've gotten all this liquidity, okay, to get the stock, to rip the stock higher. It reclaims the VWAP. Now remember, if I was short this stock, I'd probably want to get out here instead of here, because although it kind of got here and then faded, it ripped, and it can just rip as soon as it breaches the VWAP, which I encourage you guys all to study that, because as soon as it breaches the VWAP, you could see a huge short squeeze, and that's because of the VWAP being one of my 5 most important key reference points for the liquidity trap, because everyone's using it as risk. Okay? So when I say I don't use VWAP in its traditional sense, and I know that a lot of people are shorting the VWAP, I don't want to be shorting the VWAP because everyone else is short the VWAP. So yeah, the stock could tank a little bit if you're lucky and you got out, but imagine the people that shorted the VWAP here. Okay, you see that the stock bounced from the line in the sand, got above the VWAP, but then it looked stuffy. It's got wicks, and then okay, big rejection. It's also 950. People could be shorting that view. I'm sure a lot of people were short that VWAP. Okay. Now, where are shorts looking for a risk area for their short? It's number 1. It's the pre-market high, because this area. Well, first of all, if you were short down here, you're probably looking at VWAP for risk. Okay, those who are in here at VWAP for a risk are probably looking at 1050 and pre-market high as risk. So what happens here is that shorts are squeezed, they're squeezed out, and this panic is because it's breached the VWAP, it's breached these resistance areas, and shorts are stopped out at this point. But remember, what is the number 1 best time and place for them to dump shares? It's into long retail. Now look what happens here. In the morning, and again, when price attempts to break this pre-market high. Because let's go through the long side. Again, long see that 9 is held. They see that VWAP is held. They see that 1050 is breached. Then they see that pre-market high is in play again, and that is breached. Now everyone thinks that the stock is going to do a bullish reversal, and they bought it, a shitload of it here at pre-market high break, because they said, oh, it rejected once, it came back, and it's here again. Now it's really going to run. And that's exactly when they dump. So I see that we are about an hour and 15 minutes into the webinar. I want to give you guys time for some questions, anything that you guys want me to talk about or go over. And I hope that these lessons have been beneficial to you, because, again, on these breaks, I don't see my retest pattern on either of them. All I see is that it broke and it stuffed. I don't see what I need to see, which is the retest and then blast off, right? And I also didn't see it here. I didn't see the retest, the successful retest, and then break lower. Okay, now I don't remember what the tape was doing at this time, but you could see that the tape looks like it's being propped, or it looks very weak, and you could see that down here. So definitely keep in mind the action on the level 2 when you're trading around the liquidity trap areas. So remember, 1 through 5, new high of day is very important. It's a very important time that they can dump into long retail. New low of day is very important. New low of day traps all shorts, because at the new low of day, that stock can squeeze because of how many people are likely short that stock. So that's a liquidity trap in itself. At that very moment, the new low of day is when the stock has the highest probability to do a short squeeze. That's what I found in my data. It's not the new high of day break. And you'd think that it's the new high of day break is when the stock is really going to squeeze. That's not what I found in my own data. And I have damn near, I don't know, I stopped at 75 or so examples because I knew exactly what to look for after that. But after the stock has reached a new low of day, that is when I'm on the highest alert for the stock to squeeze. Because I know at that point is when shorts are all in the stock and they're very happy right now and they're stuck. So they want the stock to tank lower. And if it doesn't and it starts to reclaim, the stock can squeeze. So I'm always looking for short squeezes at the lows, not the highs. And I'm always looking for the dump at the highs, not the lows. Okay? So that's what's most important. That's the important takeaway from this. Avoiding the liquidity traps, avoiding trading breakouts that are going to be stuffed, avoiding shorting the lows that you're going to get squeezed on. And of course, pre-market high, pre-market low, swing highs, swing lows, and the VWAP, very powerful levels to study this around. So I hope you guys have enjoyed this webinar. I hope that it was beneficial for you. I think that I went over enough examples, and if you guys have any questions at all, you can message me and ask me your questions about that. But if any of you guys have questions now, you can go ahead and ask them. Any comments, anything like that, I'll talk about what you guys have, and I think that this is going to help a lot of people. I thank all of you guys for your attendance here, and I hope that you guys enjoyed it. There's a ton of people that showed up, so that's really awesome as well. Misha says VVUS is a great example of this on 2.5. TradeBunk was asking about problem with webinar buffering, but I haven't had anyone else give me any concerns about that. So I hope you guys are good. Awesome. Yep, no problem. Yeah, this is the biggest thing that I struggled with in my own trading for sure. You can have any sort of technical analysis that you really like, more than another, and that's fine. That really doesn't matter. But when you have a deep understanding of liquidity traps, I feel like it's gonna improve your game like 10 levels immediately. So you're not caught on the opposite side of the trade. You can get on the right side of the trade a lot easier just understanding what's happening on the chart. So Mervin says, great stuff. Thanks. Maynard says, awesome webinar. Thank you. Learned a lot. Of course, guys. Thank you all for being here. Like I said, I hope that it was beneficial to you guys. Got Short Bear here. Lucas, thank you for attending. Wallball, what's up, man? Zach says, thanks. No problem, Zach. If you guys have any questions, G-Man says, thanks. Thanks for making it, G-Man. Thank you guys for your time on this Sunday evening. Lewis, no problem. Okay, guys, looks like I'm gonna end the webinar here, but thank you all for your attendance. And like I said, check out my other webinars. The float webinar was really important, and the short squeeze webinar and the macro levels webinar was really important as well. And I'm so grateful that you guys attended, and I hope that this will be beneficial in your trading. If you guys have any questions at all, just feel free to message me, and we could talk about any chart that you guys have that you want to talk about. Lots of great comments here, just reading through the comments. Great webinar as always. Thank you guys. Thank you all. Okay, guys, have a great night. I will end the webinar stream here and get this uploaded, and I will post the link when it's uploaded so that everyone can review. Hope everyone has a great Sunday evening, and I will see you tomorrow morning. Cheers.